What's going on, guys? It's Tuesday. We're going to go over Monday and Tuesday's trades for the week. So far, tomorrow is CPI, so it was a little bit of a risk-off approach. I wasn't looking to go super heavy on anything, not trade a lot, just catch those base hits and get through the week until CPI report comes out Wednesday morning. So that's that. Here was my Monday. I had an OXY 35%. I had Meta 50%. I had Walmart 20%. I didn't really make much on Walmart. I more or less just managed to trade very well. It was definitely a very well managed trade. We're going to go over every single one of those for Monday. So, Monday, the reason why I liked these trades was let's go over to OXY and I'm going to talk about OXY. Um, so, OXY on Monday is right here. So, what I saw was, first of all, we had a very nice, let's just say, internal liquidity type of move down for a higher low from this range down here. And then from there on out, it was kind of a bottom. We never really made a move overnight and then just started pushing. Um, Come Monday morning, we actually gapped down a bit. So one thing that I was already really doing was pulling my fibs from high to low, mapping out those retracements, kind of just seeing where those retracements are going to be, and overall kind of, taking a potential trade based off of a, retracement into a structure break, whatever it may be. And that's exactly what we got on Oxy. So we got the gap down off the morning. Or we got the gap, no gap down actually. We got a small push off the morning. There was not enough volume within that push to really send this higher, especially after this blood that was happening on Friday, the week prior at the close. It was a very trendy day for Oxy, and that's the first thing that I really want to go over. Uh, Despite the market sell-off, Oxy had a very trendy day on Friday, starting from here and reaching 57.50 all the way to 59.20. And when you go look at the higher time frames on Oxy, this is a very textbook strength candle right here. So it was a false breakout of this downward sloping trend, and then from there on out, we kind of pushed up, tested this upper range, put in a lower high from this high on the macro, and then pushed down, closed below the 50 SMA. Okay, that's fine, but the overall markets on Friday, as you can see, SPY was had a very bearish candle print to it, as well as kind of just closing as a very bearish look, right? So we go over to Oxy. That was quite the opposite, and I noticed a lot of energy names were really pushing like that. So that's that. Come Monday morning, I'm looking for a potential test and hold of these daily EMAs down here at the 9 and 21. That's exactly what low a day was, right? So you come over here, this test down here that brought this down to here, that was your daily 9 and 21 EMAs. That was also kind of like your retracement as to the 382. If you want to, you could even pull a Friday low to high retracement, and that's kind of like your equilibrium retracement. So there's a couple things you could really go about this. Um, Eli, make sure you mute because I'm actually recording a video. Um, there's a couple ways that you could go about this. You have the 9 and 21 down here off this equilibrium from Friday low to Friday high. You could take swing low as well. Whatever it may be, I'd be looking ideally for a 382 to a 0.50 retracement because that's generally where those 9 and 21 EMAs on the daily are stemming from. That's where they're placed at. So uh, that's that. So, you get the opening push. The opening push did not have enough volume, and then you get this massive bearish print. That massive bearish print was then in much lower volume, actually. And if you go into pre-market, you even be able to see it a little bit better. This was kind of just over here. This was kind of just a more early morning shake off in a higher low off of pre-market low. Keep in mind this is where your daily 9 and 21 EMAs are, And if the stock generally wants to stay propped, it's going to have that early morning shakeout potential. And then from there on out, kind of hold those moving averages or within the range of those moving averages on the daily. And it kind of just really tells you that the setup is ready. So I'm not saying you need to snipe the bottom on OXY in regards to the 9 and 21 EMAs on the daily chart, but overall, just let the price action overall just develop, and you'll eventually be able to catch a small scalp. So that was kind of like my mindset coming into the new week, and overall, it was a pretty solid approach. So yesterday at 9:52, we had the Oxy 59 call at 56 bucks a con. It shortly popped to 58 in a couple seconds. So I was just telling my group of people 58 fill I meant, but I actually did get a 56 fill. I just wanted to really clarify that the 58 fill was okay. If we go back over to the chart, what you're going to see is that exactly 952. So 952 is right here after it was, let's go to the 2 minute chart so we could really dive deeper into it. So the 952 candle opens actually right here. And yeah, so there's a couple things I want to go over, and one of those things was as price was moving higher, that you have your opening print and your pre-market high right here at this black line. First of all, what we got was we got a early morning shakeout right into, like I said, our 9 to 21 EMAs on the daily, and as well as that Friday low to high Fibonacci. That's kind of like your equilibrium range. If you want to take swing low, go ahead. That's still about your 382 retracement. So with like I said, with the EMAs there, it honestly does look like it's going to potentially hold that spot if it wants to really go for this daily trend line breakout, right? So we obviously got this push down. That push down then resulted with stopping volume. Like I said, on the 5 minute, this push down wasn't anything crazy volume wise. And then from there on out, we start really changing our structure, like micro structure. We go from a lower low to a higher low now, and then we reclaim back into our opening print low range, as well as our pre-market range. So that's first of all the thing that we have to think about is that the range overall was claimed, and then from there on out, what happened was we pushed up into this pre-market high, and what I noticed was price was moving very fluently. That means that asks are really getting soaked, or they're pulling asks, and what I saw on the level two was push higher, bids are moving up. Push higher, bids are moving up. Push higher, bids are moving up, right? And overall, I just thought Oxy would see a nice move above the opening print high due to the time and sales, due to the overall sentiment, due to the early morning shakeout of call buyers, due to the overall sector looking like it wanted to go, and it was overall just a solid trade. Obviously, you get the push up, you get the flat price action on very low volume. That really signifies that we're going to see continuation. And my price target was 59.22. We almost hit that on the dot, 59.14. So only about 8 cents off. Not a big deal. And then you get this gravestone doji at this high a day. And then from there on out, you see a small sell off. But all it was, guys, was a 35% return from 58.75 all the way to 59.14. So that's about a 35% return. This isn't a big mover. It's not a big intraday mover. It has a very low ATR, and overall, the daily chart looked primed for a breakout. So that didn't unfortunately happen come Monday. Monday was a lot more flat for Oxy itself. I'm pretty sure Zom was the name that rallied yesterday. Um, yeah, Zom was the one that went absolutely insane on Monday. So that was also kind of what was boosting my trade here. And another thing that I really noticed that I want to talk about is Zom was just an absolute ripper right off the open. Zom, if you go over to the 5, you'll be able to see it a little bit better. Zom completely took out pre-market high. It didn't. It kind of got like the retest into this. Well, that was a little bit further away from the Oxy trade itself, but as you can see, the momentum for Zom overall from the morning was just insane, right? So this then trickled up all day, gapped up overnight, and then like right here, early morning sell off today actually, shakeout call buyers, and then just a rip all day. So, or I mean, profit takers on the underlying itself, whatever it may be. So let's go over to Walmart now. So that was the OXY trade. There wasn't anything too special about the trade, rather than just a nice base hit. Very properly managed when it comes to trailing stop losses. That's all going to be included in the Discord. Um, so the next thing was yesterday. I actually wanted to take a stab at Zom longs too. 10:48 AM. I actually did get it, but I anticipated a breakout trade. So the Zom long was actually, this was yesterday. Okay, yeah. So 10:58 was right around. Okay, here it was. So this was the 10:58, and this is what I really need. This is sometimes, guys, why you need to understand a lot more about uh, these slower moving assets and stocks that just don't move as fast as tech and things like that. So this is sort of like necessarily a risk off asset. So it's going to be a lot slower. There's not going to be a ton of volatility to it. There's not as much action when it comes to the derivatives chain. And overall, it's just a much slower S&P 500 company and sector. So lower ATR, lower volatility, probably lower average daily volume than a lot of the big tech names, but overall, it's still a clean mover. So I wanted to take Zom longs here to anticipate a flag breakout. This would kind of be a retest of previous high of day, which was right here, and overall just a hold of that level and then a push higher. But this is also just kind of that 5 minute time frame you have to keep in mind. And another thing is that this is not necessarily a valid retrace, meaning that this is not even really reaching that 382 retracement. That means that price is overall definitely a lot more extended and um, on a probability aspect, Zom is not one of those names that just goes and goes and goes and goes and goes. I like to execute Zom a lot more, especially a little bit later throughout the morning on the 10 or 15 minute because it is a much slow it moves a lot slower than what tech does. So there's not enough liquidity on this name for it to just keep rallying and rallying and rallying and rallying all day. So I noticed that this was kind of I was looking at calls here, but I noticed this was definitely sort of a premature retest and breakout, especially with the retracement not being one of too much. Definitely was still deviating a little bit away from overall equilibrium. And that's one thing that you really need to understand about liquidity is that liquidity needs to reach a point in where it's flat. So uh, I mean, this isn't necessarily equilibrium in regards to like how people talk about it as 0.50 Fibonacci or anything like that, but overall, buyers need to build campaigns, meaning that they need to soak dips to build more of a campaign to send it more to the upside, right? So the couple things that I could really just suggest about this Zom trade is that you have an inside bar after the 5 minute bar. The 5 minute bar should be a breakout bar. The next bar, following that with an inside bar on higher volume does not favor continuation, and it's probably just a false breakout, and not necessarily a false breakout that is bearish, but more or less just a false breakout that results in more dips that need to be bought. Therefore, the campaign for the buy side needs to keep building and building and building and building until it just absolutely pops. So, like I said, I mean, you pull your Fibonacci from here to here. You could even start taking this end of day supply zone, which is right here. So, this general range should be your add zone. From the stem of the absolute breakdown with the last 30 minutes into the close and the high of day range. So, that is your overall range to really, talk about a long at, right? And then you go over to the 15, like I said, utilizing Zom more on like the 15-minute chart, understanding the stock itself more on the 15-minute chart, and you could kind of see how this played out perfectly. Like I said, I mean, you take your fib from low to high, that is your 382 retracement. What do we also have down here? We have sort of like a tweezer bottom on the 15-minute itself. That is pretty bullish, especially with the fact that this flag retraced declining volume, false breakout, they sucked it back down, and then this next leg down on this 15-minute time frame was definitely on really weak volume. It was really kind of rejecting that imbalance once we entered that imbalance range from the early morning move up. So that's another thing that I really like to talk about and discuss when it comes to trading a stock with such a big parabolic move to the upside throughout the morning. It's definitely going to need some rest and a valid retracement, whether that may be a bull flag, or it might, need some chop, like a boxed range that it chops off of before it moves up, and overall just a campaign of accumulation before it really goes up for that next leg. So. Um, you obviously get your hammer candle here off of VWAP. That hammer candle was on increasing volume, and then you get a twin low right here. That twin low plus the hammer candle, and then a push up. That push up on decent volume, and then kind of like this inside bar rest candle, and then this kind of candle right here. If you go over to the 15, the flag structure tells you a little bit more. The flag structure is kind of like this from here to kind of like this, and then overall that is just looking like a push close above, and then what I was talking about, what I caught on Zom yesterday was a anticipating that move up with a front running a breakout. So I kind of like took risking kind of like a higher low off of this inside bar rest candle, especially now that it's above that 104 level, and then from there it kind of like was reclaiming that 9 EMA on the 5, and then yeah, I kind of front ran that whole flag breakout back into high a day for just like a 20%, 30% scalp. It wasn't anything crazy, but that was the Zom trade that I said I didn't want to talk about much because it was like I was front running the breakout. Um, Not necessarily the best idea, guys, but it was more and less just like a active reading tape in the middle of the day. So another thing was I was looking at the meta 10 to 15 minute bear flag. I even said that this wasn't ready yet as 11:07, so that would be right here. 11:10, yeah. So here's 11:05. I kind of saw that this was making a lower low back into that zone, and then I said not ready yet. I started focusing on the 10 meta 10 to 15-minute bear flag, and I kind of just missed that Zom bottom, which is all right. You don't want to catch the bottom either. Front running a breakout is not like you're not supposed to do that, but you're not supposed to necessarily catch the bottom either. It's kind of like it got to be a very, very well put together structure that allows you to be able to take the trade, meaning like, you get the push down into that zone of previous high day range, and then from there on out, you see that very clear change of character from a lower low standpoint to a higher low standpoint, and then a push up, potential bids following that push up, and then a eventual breakout. So that was that. I didn't take meta, but I wanted to take meta yesterday. This was the bear flag I was talking about. This is a false breakout over a 2-day high period, I believe. Yeah, technically it was. Like literally a penny above the Friday high, but a small, rather large false breakout above Friday high, or no, yeah, and it took out Thursday high. So this was yesterday, yeah. So false breakout off the morning, and then a nasty aggressive push down. That nasty aggressive push down then resulted in this extremely declining chop bear flag looking play here, and then this chop looking bear flag disgusting volume looked down, looked like it kind of reached that equilibrium point, tested this imbalance over here, and then it actually started making this lower high from this high, and then this was overall very weak. What I was looking for was overall tech to break down for the day, and then this ended up just absolutely eating shit back down into the lows of the Wednesday rally. So it actually broke Friday's low a day and even continued down further, even pre-market low, where this looks like a dark pool print. Um, and yeah, so that was that. Nothing too special about that trade. Well, I didn't take that trade, but Um, yeah, I think I was just looking at something else. So that's that. Um, I was holding the Walmart puts. Walmart was a little bit fishy, I'm not gonna lie. So what did I see on Walmart? This was a Friday bloodbath, actually, right into this daily support. And then from there on out, we kind of lost our 9 and 21 EMAs on the daily chart. It looked like Walmart was definitely a little bit exhausted at these highs with a failure to go higher and then a push down on obviously heavy increasing volume with absolutely ugly red day on Friday. So come Monday, it's a new week. I'm not necessarily going to have that same sentiment that a Friday print had because that's just a whole new week, whole new weekly print, and so forth, right? So I actually didn't get this one out on time, but I sniped the top off this 21 moving average high with this bear flag right here. That bear flag was obviously extremely weak, and it just favored that continuation, especially after price really pushing down. That looks like this, and a massive bearish print right under that crucial 154.90, which was right under previous Friday's low, right? So that was a very key. I'm sorry, that is not Friday's low. That is Friday's pivot. That's Friday's only support, and we kind of had a false breakout over that, a chop range, and then just a bleed right through the level, bear flag, and then I took this down to here, took it down all the way to here, and then I started thinking about scaling out because pre-market low to pre-market high, guys, that is approaching that golden pocket range, and overall, yeah, I mean, that's not something you really want to mess with. If there's no point really to draw that Fibonacci from, I'm really going to be cautious around the golden pocket range. And even from this early morning, where was it? Yeah, down here at these lows. Yeah, so there wasn't really much about the Walmart trade other than really good risk management. I figured, especially with this massive blood down and minuscule lower lows right into this massive pre-market candle and slash imbalance, it really didn't look good to see much more continuation. I figured they would obviously with this, obviously with the gap up, they're going to put in a higher low somewhere within this range because consumers were hot that day. So there wasn't really much. I was kind of targeting down at like the 154 range, but I wasn't going to get greedy. My first target would have been like pre-market high retest. That pre-market high retest literally didn't get there by like 8 cents, that is. So yeah, I wasn't really too worried about that. I saw some tape, like aggressive selling within the tape, and overall, uh, there's me missing that bear flag. And then here's my last trade of Monday. So Meta 300 call, it's 165, a bit lighter for the time being. So what this was, guys, if you go over to Meta, Meta was clean because why was Meta clean? Well, um, Meta was very clean because where? Oh, it's right here. Okay. This is your internal looking liquidity right here on a major SR flip on the hourly. So this is a massive pivotal level here. You could even really take this pre-market low range, whatever you really want to take. This 288 to 289 range, it's a very, very, well, 289 is a very, very key level as this was a resistance for 3 days prior to that massive breakout on Meta when Meta was up like 4.5% on the day. And then from there on out, we kind of just been pushing back down into this level and holding it, holding it, holding it, holding it, right? So whenever a level of support with a ton of liquidity gets built on it over time, eventually you're going to get that bleed through or a liquidity sweep where they want you to think it's going to bleed through and then they suck it right back up to the upside and then it's an absolute ripper for the rest of the day. Not necessarily the rest of the day, but overall tech was really signaling to me that this could potentially be a good trade. So if we go over to QQQ yesterday, it was a exact look actually. So it wasn't an exact look as in regards to a massive hourly level that Meta had, and that's why I chose to long Meta. But it overall was kind of just stopping volume at this low with this reversal favoring candle right below pre-market low dark pool print looking level, as well as the swing low right off the open. And then from there, it was a suck right back up in a liquidity sweep, I believe on not the 15 minute. The 15 looks more like it. If you go over to the hourly, this was definitely looking like a liquidity sweep off this wick. Um, so yeah, I saw that on indices. I saw indices really start reversing, and I was expecting sort of like a higher low to be put into place, but we obviously broke structure above this order block, and then from there on out, kind of pushed higher with a candle close, reclaimed VWAP, and almost made a round trip, right? So, um, oh fuck, no, 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 that was not the right day. Over here, it looked like stopping volume, like I said at this bottom, and then I was looking for a higher low actually at first, and then from there on out, it wasn't really a higher low, but this was actually at the same exact time, but overall, Meta was the better looking chart. Meta was the best looking chart on the whole entire market for the sole reason of this massive level and a liquidity sweep off of the massive level. So that's the level. And then from there, what it really was it was a push. I grabbed it at 1246. So 1246 is right here. Okay, so what I was grabbing it off of, guys, was 1245. This candle opened. It probably pushed. It started to look like a break of structure, especially on volume that was ramping like this for the higher low to be put in place. That's parabolic volume right there to really send this up. This is your hourly level. 288, not 89. That's also kind of like your pre-market low. And then from there, what I saw was if you go over to the 15, you're even going to see it a little bit better. Here it was, and then you know push up, secondary entry off a hammer candle, turn into a hammer, pushed up, reclaim the range, and then from there it was increasing volume moves up, right? So I expected sort of like a round trip. My first price target was 291.50, which was this supply range up here, 291.50. We actually hit that to a T as well as kind of like this established support off the morning. And then we obviously rejected, and then we broke out of this flag. This flag, as you can see, got extremely exhausted down here. When you see a push up like this with the stem being on really high volume and then kind of like a low volume consolidation chop, you're ideally going to want to look at the continuation in which there was a stem from the rally on really high volume, especially with the liquidity sweep, the and overall like the wick that trapped all those sellers on this trend look. And yeah, inverted hammer on the 5 at low a day as well. Um, so that was the meta trade. Nothing too special, just being patient and really executing that. I took most of my position off up here for like 20 something percent, I think, and then I caught my runners and kind of called for a round trip right here. And it almost was a round trip. Not necessarily from this false breakout high, but it was more like a round trip from the open. So the open, and that's what I mean by a round trip. It was almost a round trip from the open. There's the open, there's the close. We bled $8 and 42 cents. We rallied $7 and 10 cents. So it almost was a round trip. Meta red to green type of day. So that was a clean trade for 50%, and then that was it for that day. So today, OXY 60 call, $31 a con. So very key word already, $31 a con. Sometimes premiums like that cheap will move like shit. And that's kind of what I knew I messed up on because I broke even on the OXY trade today, and it ran like almost 300%. So we're gonna go over to OXY, and I'm gonna show you what I was talking about in we were just talking about OXY on the Friday recap. So let's go take a look at the daily and start out with the daily. First of all, there was a false breakout and then it kind of pushed up after it got a test and it looked like a fake out to the downside and overall just a higher low put in place right here, I believe, off of like pretty much just equilibrium or 618 actually. So um, Friday, big mover Friday. The following day, meaning Monday, ZOM was the big mover. Therefore, I wasn't too worried about OXY. It had a big move Friday. Come Monday, probably needed rest. It formed an inside day with a close right under the 50 SMA. So I figured the next morning, meaning this morning, had a very good opportunity to take this for a long because this false breakout high is not necessarily such a relevant level to really be paying attention to. And why is that? Well, why is that is because this was a false breakout that rejected up here on right before the half day, which was Monday of last week. That was the day before the 4th. And then the following day after that, prior to that, was the day after the 4th. And I believe FOMC minutes was on that day. So I didn't hold a lot of I didn't want this like level up here to be super relevant. I was more or less looking at this level and this range all the way up here for OXY to potentially hit that price target at. So um, we're going to go into the 5 minute. This was an inside day breakout level, so that means that this bar right here of price action was within the range of this one. And this was right above a trendline breakout, with the false breakout being up here and then the actual resistance ranges being over here that were stemmed from massive V-shaped projections and things like that. So as you can see, I mean, the very first turbulent kind of interruption that we got right out of the open or the rally was that general range up there of the $60 psych. So that's that. The reason as to why I got out of this, guys, look at the price action in which I took it in. I took this at 951. Here's 950 print. So I took this, caught a decent move up. I was anticipating a rip right off the go with this breakout looking volume, followed by this digestion candle right above the level on really low volume. I really like that for a potential continuation, especially above this inside bar breakout high. And overall, just XLE, ZOM, they all looked pretty solid today. ZOM was actually dipping off the open, and I was kind of expecting, like I said, that early morning shakeout that I've been talking about that happens on the oil names. And CVX was just a nice trend right, all day pretty much. It got a retest the previous high day. It held previous high day very cleanly, and then from there on out, it was just a nice move all the way up. Um, so I knew the sector overall was pretty strong, and I knew Oxy had a pending breakout because ZOM was the mover yesterday. So ZOM wasn't the mover today, therefore Oxy with an inside day breakout level, inside day breakout opportunity, we should see a breakout in a very parabolic move to the upside, especially with the trend line having a false breakout a couple weeks ago on a irrelevant day, meaning the 4th or the day before the 4th with a very low volume, like a half day in which was deciding whether Oxy would break out, and then the next day after that, which was Wednesday, um, was the FOMC day. So I was not too worried about a false breakout on Oxy. Um, what I just didn't like this because it was pushing up, it pushed up and tried to break out on low volume right after the digestion on really low volume, followed by massive breakout level. And overall, guys, my premiums just like weren't gaining value all the way up here. Like all the way up here, and it made me feel like I don't know, it made me like start getting a little bit superstitious about where Oxy was going to be headed just for the sole reason that my premiums were $34 right here and $34 up here after like a 15-cent move. And like that should just not happen. Your premiums, especially on a stock that doesn't even move that much, this should not be something extremely. It definitely wasn't something where the premiums were like super strong. I usually want to see strong premiums on a stock that I'm anticipating a breakout for. So And then we made a lower low down here. That lower low was then right back into the inside day breakout levels. So it's simply just trading the chart, guys. Potentially waiting for that retest to go long, or waiting for that clear confirmation to go long, which was probably on this candle or this candle. And like I said, I mean, this candle over here did not hold significant weight. I didn't hold a significant weight to the level itself, just for the sole reason that, like I said, guys, it's the false breakout high of the trend lines. But that false breakout high was a day of low liquidity on the Monday, and then the following day after that was FOMC. So I'm not really too worried about it. Um, and we obviously had no issue with that level, and then we just push higher, push higher, push higher, very clean price action right into this, and then flag on low volume, and then just continue all day right up to that price target that I was talking about up here, uh, off of the $60, 60, 70 range. So I figured Oxy definitely had its opportunity to rip today, and I'm pretty bummed out I didn't catch that, but you know, it is what it is. You live and you learn. Um, so that's right here. I cut for break even because I said volume was getting really flat, premiums suck, and I actually planned on adding this back, and I never really got confirmation. And then when I did get confirmation, I was a pussy about it, and I ended up, you know, not taking it. So, um, yeah, like I didn't think Oxy looked bad either. I did not like the risk involved with it as I saw my premiums not moving, with the price moving up and making higher highs. So, yeah. And then after that, today's trade, next trade was Starbucks. I got a small size on the Starbucks 100 call at $70 a con. That was at 11:08. The reason as to why I like Starbucks, and I really want to go over this one. Starbucks, guys, it was a false breakout below these lows on the daily. False breakouts then lead to fuel for the upside. Here's a massive daily level with a false breakout below. That false breakout was then a ripper on Monday. Starbucks was a very strong name on Monday, with the underlying being up almost over 3% actually, and retesting these highs over here. So these highs obviously provided a very clean opportunity, as this is resistance. This was the resistance of the Ripper on Monday. We kind of reclaimed our daily EMAs, and we look like we could eventually test that 200 SMA. So if you dive into the intraday chart, um, yeah, this trade was really fucking unfortunate. 11:08 a.m. That was right here, right? 11:10. Is that the candle open? Here, let's go. All right, here's 11:08. So what I was seeing, guys, I grabbed a light size because I figured, okay, so if you go back to the 5, so I caught it like right here. It went up to here and then pushed down. So one thing that I want to talk about was that this was kind of retracing into that golden pocket, high to low, and this was overall just kind of like a false breakout over 100, and then a push down. That push down was actually on decreasing volume, and then it started to base actually right off of the range of the highs, and started to claim the range of the highs from the Friday massive trend day, right? So you know, when you push higher, grind higher, and then you just start making these higher highs, and we start to really base on that level, I anticipated a breakout right here. It wasn't the best idea, and that's why I said light size. It was a crucial spot, like I said on the daily chart. It was a very strong mover yesterday. It wasn't an A plus setup, but I was looking more or less for a secondary entry to add full size off of. And if it wasn't, then I was just going to take the light size scalp off the expansion of the golden pocket. We obviously never got that, followed by a low volume breakout right above the 618. That's not exactly a good sign to potentially go long. And overall price was really just compressed between the um, pre-market low and 15-minute orb high, right? So I thought that this would be another small trend into the end of the day for the day, and then I never sniped the bottom for the secondary entry. I added a dip a little bit, but it was never really it was never necessarily a Where did I say secondary entry? Oh, may get a secondary entry for a higher low. Yeah, so that was your higher low secondary entry. It was below this lower low, but overall, I mean, it was kind of just following trend and you get your hammer candle at lows and then you kind of reclaim highs, flag on top of the previous high day, and then push higher. Like I said, I never added that dip when I was down like 16, 17% on the light size position. It wasn't the best trade, but I was also kind of just pissed about OXY, which I need to really work on. And that's one thing that um, yeah, they ran, I mean, I only went up about, I don't even know. Lastly, I actually did take Neo today as well. Um, AMD, this looked like it wanted to go to, and then it kind of just rejected off of this 15-minute orb high close. AMD. Why did I like AMD? I like SPY for a rally in a day. I'm not even really going to go much in depth with this one, but it was a break of structure on the 5-minute time frame, and then you get the retest into the 5-minute break of structure range and then you reclaim VWAP. I took calls here for a push up to this, and yeah, I mean it was pretty simple. So that's it, guys. Oh no, not Neo. That was Oxy. Oxy. Alrighty. So yeah, that's it. And then obviously, Starbucks had to drop one more time. Starbucks actually, my idea was right. It just, sometimes you got to be patient or, cut for the win or stop out a break even and look for another opportunity. Previous high day, we obviously got the retest into that and had a nasty push from 99.50 all the way to 123. And for Starbucks, I mean, that's a slow mover and that's a 78-cent move that yields you a decent return for a intraday trade on the calls for the weeklies. So those were the trades for the day, and yeah, there wasn't anything too special today. Yesterday was a solid day with Meta, um, Oxy Scalp, and then obviously the whatever the other one was, can't remember.